In today's turbulent housing market, the dream of finding that perfect property often feels like an exhausting and frustrating uphill battle. You've likely felt that weight, poring over listings, seeing prices climb, and wondering if a truly great deal still exists, or if you're destined to settle for less. Conventional wisdom tells us to compare, analyze, and track market averages. We see these charts, these rising lines, and believe every property's value is perfectly reflected in its listing price, driven purely by supply and demand. But what if this widespread belief blinds us to profound opportunities? At Keystone Property Advisors, we argue that true wealth isn't found by following the herd, but by understanding the subtle, often overlooked reasons why a property might be fundamentally mispriced. This isn't about chasing fleeting trends. It's about deep analytical research that reveals properties others have simply missed. Imagine unlocking the door to a property that, to the untrained eye, looks unremarkable, but to you represents a hidden fortune. This is the difference between buying a house and strategically acquiring an asset. We're not just talking about finding cheap houses. We're talking about unearthing properties whose true potential, for a myriad of reasons, isn't reflected in their current market value. These are properties whose value is questionable only to those who lack the insight to see beyond the surface. Properties ripe for a strategic investor to transform. They might be in decent areas, but simply carry a perception problem or an overlooked characteristic that makes them appear less desirable than they truly are. Understanding this subtle divergence is the keystone to smart investing. Most realtors and everyday buyers operate within a narrow band of perceived value, often relying on recent comparable sales without digging deeper. This is where opportunities vanish. The housing market, despite its apparent stability, is a complex organism, often exhibiting volatility that creates perfect windows for those who know how to identify and act on anomalies. Prices are rarely perfectly efficient. Fluctuations are constant, and they often conceal genuine opportunity. Of course, one obvious source of mispriced properties comes from distress. An older home needing significant repairs, a property that has been neglected for years. These are the low-hanging fruit, often seen as problematic rather than potential filled by the average buyer. Such properties often end up in highly competitive auctions, drawing a crowd of cash buyers and seasoned investors, driving up price. It's an efficient market for distress, but not necessarily for discovering true undervaluation. But mispricing isn't just about obvious fixes or distressed sales. It's also about understanding the broader urban and suburban landscape, identifying areas on the cusp of significant growth, where a property's current value hasn't caught up to its future potential. Savvy investors look at the entire city, seeking pockets of overlooked opportunity, not just individual houses. Behind every mispriced property is often a motivated seller, driven by circumstances far beyond market rates. Financial strain, job loss, or overwhelming debt can force homeowners into a corner, making them prioritize a quick sale over maximizing profit. This isn't exploiting vulnerability, but understanding a reality that presents an opportunity for a win-win transaction. Equally powerful, though less obvious, are properties sold due to significant life events, like an inheritance. Grieving families, burdened with properties they don't need or want, often seek a swift, uncomplicated sale. Their motivation is not financial gain, but emotional closure, leading them to accept offers below true market value. Then there are the for sale by owner properties. These sellers, often trying to save on commission, might lack the market knowledge, negotiation skills, or broad exposure to price their home effectively, leaving significant money on the table. A direct, clear offer from a savvy buyer can be incredibly appealing. Vacant or abandoned houses represent another potent source. These properties are a financial drain, accumulating taxes, utilities, and maintenance costs without generating income. The longer a house sits empty, the more motivated the owner becomes to offload it, often at a significant discount. Ultimately, these scenarios converge into what we call the urgent document signing moment. These sellers are looking for a swift, no-fuss transaction, and they are willing to price aggressively to achieve it. This psychological element is often where the deepest value is truly unlocked for astute investors. Beyond the seller's motivation, many properties are mispriced because they simply look ugly to the average buyer. An outdated kitchen, a neglected bathroom, or unappealing decor can instantly deter most, even if the underlying structure is sound. They see expense and hassle. A savvy investor sees superficial flaws that can be strategically remedied. This perception gap is compounded by external factors. An investor must also look at the broader picture. Is the area undergoing urban redevelopment? New businesses, infrastructure projects, or community improvements can dramatically increase property values, even without extensive internal renovation. Identifying neighborhoods with development potential is critical. These are areas where current property prices lag behind impending growth. It's about forecasting where the city is headed, understanding demographic shifts, and spotting the next rising star before the masses do. This macro-level understanding amplifies your property-level value-add efforts. Furthermore, understanding property zoning maps can reveal hidden value. A property zoned for multifamily use that currently hosts a single-family home presents an immediate opportunity for increased density and higher rental income, or even a future development project. These regulatory nuances are often overlooked, but can dramatically change a property's intrinsic value. The key is not always a full gut renovation. Often, minor home renovations, strategic updates that offer the highest return on investment, are enough to close the aesthetic gap and unlock significant equity. It's about smart, targeted improvements, not wasteful overhauls, focusing on what buyers truly value. Once a potentially mispriced property is identified, the investor's house walkthrough is far from a casual viewing. It's a methodical examination, looking beyond paint colors and outdated fixtures to assess structural integrity, potential repair costs, and opportunities for reconfiguring space. Every corner is scrutinized, not for emotional connection, but for quantifiable value. This detailed inspection feeds directly into the real estate investment spreadsheet. Here, emotion gives way to hard numbers. Acquisition costs, renovation budgets, holding costs, projected rents, and resale values. This rigorous financial modeling is the bedrock of any sound investment decision, revealing the true profit potential. Executing the vision requires a reliable team. A contractor-investor meeting is crucial to align on scope, budget, and timeline. These aren't just transactions. They are strategic partnerships, ensuring that the value-add plan is carried out efficiently and to the highest standards, maximizing your return. Watching the kitchen renovation work transform an outdated space is not just about aesthetics. It's seeing projected equity become reality. These targeted improvements breathe new life into the property, making it attractive to a broader market and justifying a higher selling price. And finally, the renovated house with a sold sign. This isn't merely the end of a transaction. It's the successful culmination of a strategic process. It's the proof that by identifying mispriced assets and executing a clear value-add plan, significant wealth can be built, turning overlooked properties into profitable ventures. Even with clear data, many potential investors find themselves in a skeptical meeting, second-guessing opportunities that deviate from the mainstream. This internal doubt can be a formidable barrier, causing them to overlook genuinely good deals out of fear of the unconventional. This often leads to investment hesitation. The fear of making the wrong move, of missing some critical detail, can paralyze even the most diligent researcher. In a fast-moving market, hesitation can be as costly as a bad decision itself. The herd mentality is another powerful force. When everyone is chasing the same hot neighborhoods or property types, prices get inflated, and true value disappears. Finding mispriced properties requires deliberately stepping away from the crowd and trusting your own unique analysis. Analysis paralysis, ironically, can be a major pitfall for otherwise smart investors. Drowning in data, endlessly researching, and waiting for the perfect scenario means opportunities slip away. While diligence is key, there's a point where you must transition from analysis to decisive action. Ultimately, the greatest regret for many aspiring investors is the missed opportunity. Seeing others succeed with properties you almost bought or areas you almost invested in serves as a powerful reminder. The market rewards action, especially informed action. Overcoming these psychological hurdles is as vital as the financial analysis itself. To truly pinpoint mispriced assets, you need to go beyond basic comparable sales. This means conducting deep property comps research, looking at factors like age, condition, lot size, specific features, and even recent price reductions in the immediate vicinity. It's about finding the apples among the oranges. Data is powerful, but nothing replaces boots on the ground neighborhood scouting. Driving through prospective areas, observing local amenities, school districts, traffic patterns, and general community upkeep provides invaluable qualitative data that no spreadsheet can capture. It's about feeling the pulse of the area. Before any commitment, a professional home inspection is non-negotiable. This reveals hidden structural issues, deferred maintenance, or costly repairs that could erode your profit margin. It's the ultimate due diligence, turning potential unknown risks into quantifiable costs you can factor into your offer. Building a strong network in the real estate world is another powerful tool. Attending a real estate networking event allows you to connect with agents, wholesalers, contractors, and other investors who can bring you off-market deals, share valuable local insights, and become part of your trusted team. Ultimately, finding mispriced properties is an ongoing proactive process involving constant communication. The investor phone call isn't just about negotiation. It's about nurturing relationships, following up on leads, and staying informed about properties that might never hit the public market. The best deals often happen quietly. The power of uncovering mispriced properties isn't just about a single profitable deal. It's about establishing a consistent pathway to significant wealth growth in real estate. It's a strategic, long-term approach that compounds over time, building equity and passive income streams. This systematic approach cultivates a confident investor discussion, where decisions are backed by thorough research, strategic planning, and a deep understanding of market psychology. You transition from hoping for a good deal to confidently creating one. The ultimate reward is becoming a satisfied property owner, knowing you've not just bought a house, but invested intelligently, uncovering hidden value where others saw only problems. This is the true satisfaction of building wealth with purpose. At Keystone Property Advisors, our mission is to empower you with the insights and strategies to find these hidden fortunes, navigate the market with confidence, and build lasting wealth. Visit our channel for more in-depth analyses and real-world strategies.